At options play. Let's just run through it, Jessica. You got any glimmers of hope for us?
Yeah, I'd love to run through it. So I think it's important to take a step back and look at the overarching picture of the S&P 500. And we want to focus on a broad-based market because that's where we can see true trends and health of the economy, especially from a technical perspective. So what I wanted to share with you is a 5-year chart with a weekly moving average. And if you notice that weekly moving average, every time the market hits a bottom, it actually briefly goes below this moving average before it rallies and goes above. And additionally, whenever the market is above this moving average, it's a secular bull market overall. So think about the way the Fed's even looking at the market when they're trying to understand raising interest rates and all. We're still up from those lows from that pandemic. And overarchingly, even though it's a bear market, it's a secular bull market. If you look at the overall picture as the S&P 500 is over that 200 weekly moving average.
All right. So that's one sort of aspect. And where's the takeaway?
Yeah. So the takeaway is where are we spotting the bottom? So if it's going to hit, if anytime the market rebounds and it gets back into rally department or rally territory is when it goes above this line. So since this is a calculation, if we find an area of consolidation, so the S&P 500 right now is supporting 3,900, we have more value there. Those averages are going to intersect at some point. So right now I'm spotting 3,500, but I'm hoping that we'll find an area of support like we defended today around 3,900 that will move that average up. And as soon as those lines intersect, which is the market and the 200 weekly moving average, then that's where I will call a bottom.
All right. So you're not ready yet. And again, we see, potential downside there, but also some areas right here that could help us avoid maybe going back to 3,500. Quickly on energy, what are your thoughts there?
Yeah, I think that's something important to watch out for, because what's really contributing to inflation, like everyone's been saying repeatedly, is that hot labor market and high energy costs. So energy is a great sector. We look at XLE, it's something that's definitely performing well. However, for the overall broader markets to perform better, we certainly need to see a pullback in energy. So it's something to watch, but something to be bullish on the short term.
Jessica, can you just give us a quick read on Apple as well? I'm sorry that I've asked you to do all of this quickly. I don't know. It just feels like that kind of day. We want as much information about the market as possible. Apple is kind of a bellwether here, as much like you say, absolutely energy is too. What are the Apple charts telling you?
Yeah, Apple's a great stock to watch. It makes a huge component of the market. And keep in mind, even if we're comparing the market over and all to the Great Depression and looking for those downturns that happened prior, there's new securities in the S&P 500 as well. And one of those is Apple, that makes up a huge chunk of the major indices. But Apple is something that's easily tradable right now, is what I'm going to call it. It finds areas of support and resistance, and that right now is 137 to 150, and it's like a ball bouncing from floor to ceiling. So if you're looking for something to trade, Apple is a really great one right now, because it's just not falling below that 137 area and not going above 150. So it's just something to watch and something that could be interesting to trade short term.
All right, Jessica, thanks. We'll leave it there. We appreciate it.